Hi, I'm Aaron Newworth with ETF Trends and ETF Database. I'm joined by Chris Huemmer, Senior Investment Strategist at FlexShares Exchange Traded Funds. How are you doing, Chris?
Good. How are you doing, Aaron?
I'm doing well. Let's get into it. FlexShares just had a big fund launch this week, introducing four new ETFs. Can you introduce us to these funds and briefly walk through the key points of these strategies?
Sure, absolutely. Aaron, thanks again for having me. The four ETFs that we launched this week really serve as a series of core building blocks in investors' portfolios. There's two equity and two fixed income. The equity products cover US large cap and developed ex-US, and the two fixed income cover investment grade credit and high yield. All four of these strategies are designed to be core strategies looking to limit the tracking difference from their respective asset class segment, while also improving the aggregate ESG metrics of the portfolio and reducing the climate-related risks. As these are designed to be core allocations, they're priced accordingly. The U.S. strategy, the FlexShares ESG and Climate U.S. Large Cap Index Fund, ticker FEUS, is priced at 9 basis points. The developed market product is 12 basis points. The investment grade credit is also 12 basis points. And then the high yield is 23 basis points. So they're all priced to be those core asset allocations in one's portfolio.
All right. Well, looking over the literature, there is a lot of emphasis put on this ESG Vector Score. Can you describe how this process differs from what already exists in the industry?
Yeah, absolutely. So I think one of the challenges investors, stakeholders, regulators have today is trying to figure out all of the countless ESG frameworks that are tasked with measuring various firms' level of ESG exposure or risk. I think if you look at the different frameworks, there's many different ways to tackle it.
Okay.
Our focus was designing a process that focused on those ESG issues that are most relevant to investors, and to do it in a transparent, consistent framework that could be applied across all asset classes. To do that, we look to two third-party frameworks as really the backbone of the strategy. First, we looked at the Sustainable Accounting Standards Board's framework to evaluate the relevance of ESG issues on an industry level, and we partnered that with TCFD's, or the Task Force for Climate Financial Disclosures, assessment of the resilience of a company's framework around ESG issues, with a forward look of what is to come and how that company is managing those risks. That's what I think is really key here. Is the dual framework helps us evaluate companies based on the ESG issues that are material to that industry today, while being also adjusting for how that company is preparing for future issues that could come up and how they're managing that on a go-forward basis as well.
Okay. The name of these funds highlights both ESG and climate. Does this mean that there is an extra emphasis put on climate, either through the environmental part of the vector score or in some other manner?
Absolutely. I think one of the things that in our conversations with clients that we've seen is, in addition to a focus on ESG, specifically climate-related risk is something that's imperative to investors today. And we wanted that to be included into our process. So not only are we looking to improve the aggregate ESG score of the portfolio, we're also looking to address specifically climate-related risks. And we do that by looking to reduce the carbon intensity and the carbon emissions that the portfolio and the companies owned in the portfolio produce, as well as the carbon reserves. And then in addition to that, we look at a risk rating to see how well that company in the future is managing the movement away from a fossil fuel economy, and how well they're managing that transition. So in addition to that ESG uplift, having a focus on climate and carbon emissions, I think is really a good value add within this product space.
All right. Well, finally, I want to congratulate FlexShares for 10 years since the launch of your first ETFs. Any thoughts you want to share on the anniversary?
No, absolutely. Thanks, Aaron. I appreciate it. it as someone who's been with FlexShares through that whole window, it's been amazing to see the growth we've seen over the last 10 years. We went from zero to now we're 19 billion in assets under management. We've expanded to beyond the US, that we have launched funds now in Europe, and now we have 33 funds across the globe that we're managing and helping investors solve for their needs. And the interactions with clients and investors around the globe has been a great experience, and it's something that we look to continue to grow over the next 10 years.
Great. Well, thank you, Chris. We appreciate your insights and look forward to chatting again soon.
Appreciate it, Aaron. Thanks for having me.